everyone, this is Jillian Sidoti from crowdfundinglawyers.net, Trowbridge Sidoti. And on this segment of People You Should Know, I am interviewing Richard C. Wilson from Centimillionaire Advisors and the Family Office Club. And if you've watched any of these before and you thought that was good information, but not really for me, not what I really need, anybody who's watching this, who follows me or is a client of mine, you need this information because this is about how to get in front of large investors and how to speak to them. So welcome, Richard. Thank you so much for joining us today.
Yeah, thanks for having me, Jillian. Appreciate it.
So tell me about what Centimillionaire Advisors does.
Sure. So we have a performance-only fee model of working with ultra-wealthy investors, private investors. Like our newest client we're onboarding right now is a $14 million net worth dental clinic owner. But we also signed an agreement on Saturday with a $50 billion net worth family. But most of the families are, 30 to 50 million net worth, up to 500 million is the majority of who we work with. And all of these families want two things: to formalize or start their family office and to improve their direct investment deal flow and their direct investment program. So we just simply help with like the non-traditional wealth management aspects of their portfolio. Like we don't trade stocks, bonds, and ETFs like 400,000 other people do. We just help them with the parts of allocating to real estate through a sponsor or directly, sometimes through funds or through to operating businesses where they made their money.
So you're really taking people and saying, look, you can go to anybody who can get you into the stock market. We're going to get you into deals you couldn't otherwise find.
Right. Because these types of deals, you can't get them on a point-click platform. And if they were on such a platform, they might be at a much different valuation. The terms wouldn't be able to be modified to what you like. And these are deals that are closing, every 30 or 60 or 90 days. So they're coming and going, and it takes a lot of work to figure out who's credible and what a good quality potential deal is.
So for the people who are watching this and who are thinking, hey, I really would love to get in front of these family offices, how do they do that?
Well, a long answer is we have a free book at capitalraising.com. So that's an 80-page answer to your question. Kind of the one sentence answer is figure out what type of ultra wealthy investors you should really be talking to. If you're raising capital for medical office buildings, maybe go to medical high net worth, ultra wealthy medical professionals who get the medical office building space because maybe they've owned their own medical office space for their dental clinic or something. If you're raising capital for a manufacturing company or consumer products, find people who have made money in that space. If you really are just raising capital for apartment buildings and you can't find someone who had an exit in that niche or is always investing in apartment buildings, then you go to who do you naturally have access to in your local market. If you don't naturally have access to any ultra wealthy, you're not an YPO, you're not in a Porsche driving club, you're not in some business owner network, then you have to think, where are these people congregating and how do I get involved in some of these different communities so I can be consistently meeting them and having them find me because I'm speaking in front of their trust and estate planning group or in front of their business owner club, et cetera.
So get in front of them, obviously, is step number one. Like you need to make sure you have access to them. So I know you have the family office club as well. Right. Beyond the advisor, you have the family office club, and they run events where all these family offices are.
Yeah.
Is that
I have a 20-person
step
team.
One?
Yeah, I have a 20-person team that's been doing that. So I think there's two ways to be looking at that. That I'm being genuine by saying, like someone from Goldman Sachs said, how do you hunt down these families? I said, well, you don't. You have them find you because then they're reaching out for help because they see you as a genuine resource, just like you, Jillian, doing this podcast for someone who needs help raising capital, syndicating, making sure they're not, doing something that breaks a regulatory law. It's niche expertise that they want after they hear you do this podcast.
Right.
In your business. So the same thing is what I'm saying people listening should be doing. And that I believe it because that's what we've done with the Family Office Club. We've created the system that attracts family offices to us, adding value to them first by writing books, called Centimillionaire Strategies and How to Start a Family Office, et cetera. And that's the absolute best way to be meeting family offices. Add value first so they find you. But another way is to check out the 30 events we do per year at familyoffices.com. And we just had one yesterday in Dallas with 250 people. We have a 1,000-person event in Miami coming up next month. Singapore is coming up real soon. So we've got, events coming up every month. And that would be another way to meet family offices and figure out the industry, of course.
So that's really cool. So you have these like all over the place.
Yeah,
Okay, so we get involved with familyoffice.com. We go to these events, we get in front of the family office. But what I really want to get down to, and I'm going to challenge you a little bit here, is
sure.
once we're getting in front of them, they know who we are. We're adding value. We're telling them about, like, I'll take an example of somebody I spoke to this morning who does hotels.
Right.
They're adding value by telling people how to get into hotel investing. What is the presentation? What are these family offices specifically looking for?
Sure. Just so the show notes are right, it's familyoffices with an
That's,
s.com, just
oh,
so you don't
sorry.
end up at
Yes.
a bad website. But so basically, the number one most important thing to get them into that educational event on hotels,
Yeah.
or when you first start the event, or on your business card to drive business forward, is to think about what you're doing and what you're very strong at, where you add the most value, what your investor really wants, and what the competition's not really providing, and the trifecta of those three things, the intersection of where there's demand, not a lot of competition, and you're very strong at it, is where you should focus your energy. So it
Okay.
could be that it's getting people started on hotel investing, or it could be that everyone invests in multifamily and they feel overweighted there. They want access now to self storage and hospitality to diversify a little bit. So, kind of teaching people through that lens. So,
Okay.
it's I think that's more powerful the more you can customize the type of value and the way the messaging is said to what's already going on in their brains. You're talking directly to them. And a perfect example of that is our work with surgeons. We have something called the Registered Surgeon Association, and we basically are, creating content and solutions for surgeons to help them invest in other surgical practices, healthcare deal flow, and real estate. So all the words we use is from that perspective and trying to hit them between the eyes with big value.
So where, so in other words, treat a family office is no different than any other investor. You have to really lead them into the opportunity by giving them something first. You can't just expect them to, because they have a lot of money, doesn't mean they're necessarily going to act or invest in your deal, because they need to know more about it. They need to be educated. They need to have a certain level of comfort that they trust you
Right.
to be able to invest.
Yeah, I mean, I think that they're no different than any other family in that sense. One difference, though, is the average high net worth individual sees one or two investment opportunities per year, and the average family office might see 10 a day. So it can be night and day different that way. Many times people raise capital from private investors at 50 to 150,000, 250,000 a chunk. Then they come to the family office club and they try to learn how to raise capital from family offices. But the sophistication level is 10 times higher because they see 10 times or 100 times the deals. You
Yeah.
can't just say, "Oh yeah, we buy apartment buildings, we fix them up and sell them," because I've heard that literally 300 times before. You have to say something that's unique from all those 500 other people, as in, "Oh well, we only buy student housing apartment complexes in opportunity zones, and we have a performance fee only model." Or you have to say, "We have a joint venture co-investment model so that there are no management fees, no performance fees, and we just take a little bit of an equity bump up front. We take no fees up front. Our equity stake just grows a bit for finding the deal, and we're just in the deal with you as a co-investor." Because nobody is saying those things. So you have to think about what's everyone saying and to be the anomaly thing that's better structured, better returns, more aligned, more high conviction.
It's so funny you said that, because I just did a presentation the other day, or I was doing like a little mastermind with a couple of students of mine. And the one of the things that the students were getting hung up on was, how do I tell people this is a great opportunity for them? A huge thing that I've seen lately is talking about being a passive investor. You can be a passive investor in this deal. To me, that's a very negative word. Most of these
Right.
family are born because somebody worked really hard. So the idea
Right.
passivity is not that's not a positive word to them.
Right.
So, yeah, so I'm seeing this whole thing of be a passive investor in my deal, and people are going, oh, it's not working. Well, it's not working because passive, A, is a negative word, and B, everybody's doing it. So you have to
Right.
differentiate. What I'm hearing you say is something similar to what I said to these students of mine, is that you got to be different. And we need to know what makes you different, not what makes you the same as everybody else.
Yeah, you basically have like one sentence to tell them why it matters that you exist on planet Earth
One
in their
sentence.
life, you know.
Yeah.
And I think that I met with a $1.4 billion in assets investment manager yesterday, and their marketing was just awful, but they had grown despite that. But their tagline was something like strength through integrity, and their investment management firm name was basically like XYZ Capital. It's like you read the brand name, you have no idea what they do. They read the tagline, you still have no idea what they do, or even where they invest or what they invest in. So I think you really want to be able to say in one sentence something that nobody else is saying, or better yet, nobody else can say. So this firm has been around for 33 years, 1.4 billion under management, and their performance fee only. They put that all into a sentence and craft, one little other piece about what area they're investing in. And I think they're going to have a very powerful one-liner, and they've never bothered to put that together, and I think it would accelerate their growth. So I think saying the thing that explains why you're unique with tangible numbers, so it's not best in class or deep experience, but it says we've closed, like one of our investor relations marketing agency clients has done a lot of debt note investing, and he's closed 437 deals over 13 years. So he said, distressed debt note investing, over 437 deals closed in 13 years as the one liner for the work with him. And before, he didn't even have a one liner to compete with that. He had nothing. He just wrote a paragraph to people trying to explain what he does.
Right. So, what once these people get in front of family offices, I imagine they need some kind of, I wouldn't say special care, but they need care. They need care just like any other investor. So what do you suggest uh, a sponsor or a money raiser does to set up to be successful and to continue getting money from these family offices?
Yeah, I think it's just taking the care to protect their time. And it's going to be a waste of your own time if you rush into the meeting and you're not prepared. So figuring out what some of their investment history is and what their preferences are, other deals they've done in the area, asking a lot of questions while being respectful of their time, but not just pitching the whole meeting and then you don't learn anything. And I think just going into the meeting focused on where the meat is. So there's an $800 million wealth advisory group here locally that wants to convert into a family office, and they need a partner or help to do that. So I wrote them an email this morning and said, hey, here's where I see the gap in where we could help and where I think we could talk about in our meeting. And here are a bunch of examples of things we've done in the area. So by the time we go to a meeting together, it can be very concise and to the point, and then it's powerful for both parties instead of going to a meeting with no agenda. No one's done their research yet. You go in there and you waste 30 minutes of your life hearing about where somebody went to school and how the basics of their firm works. Like you could scan that in a minute and know it, versus them, being long-winded on the phone. And my most powerful phone calls are usually 8 to 12 minutes long because those are the most, busy people on planet Earth. So I think that's the most important type of care.
Yeah, I think that's something people lose. You know, I always tell people, and one of the people I admire in the money raising space is a man named Oren Klaff, and
Uh-huh.
his mantra is do not have a presentation that's longer than 20 minutes.
Right.
And that just goes, that fits in right with what you just said, which is that you need to be able to get out what it is that you're going to offer to these family offices within 8 to 12 minutes.
Right.
That's going to be
Yeah,
the
I think
most
that's so
powerful
critical.
conversation.
Yeah, it's really important. And we do these full day workshops on influence and persuasion that I teach. And we do one on capital raising fundamentals. We have one
Oh,
on
wow.
private investor advantage. And we've got 6 different ones. And one of them is fun because we do like TED Talk like format. And we have 20 people on stage to talk for 10 minutes each who have all raised $100 million plus,
Oh,
giving their best
wow.
advice. And one thing that comes up very consistently is just the brevity and how concise and pointed you need to be to make a lot of progress. And the investor relations agency I talked about before, we have 7 people there, and it's at pitchdeck.com. And that's the thing that we help people do is just get a 12-page pitch deck, not 44 pages or 30 pages. And on the very front page of the pitch deck, the top of their one pager, on their website, on their business card is that one liner. Because without that, no one's going to open your pitch deck. They don't care. They're not looking for things to read for fun.
Oh my God. That's it. Guys, I don't know if you caught all that, but you want to have short presentations that get to the point. These people are very busy. You cannot waste their time and you have to differentiate yourself from everybody else. Okay. So Obviously, Richard, you are a wealth of information and resources, but if somebody's starting off, where do they start with you? Do they start with familyoffices.com, or do they start with a family office club? Where do they go? Do they
Sure.
consult with you? Is that even an option, consulting with you?
Most people, unless it's on a retainer and they're getting exposure through different things, we don't do a ton of like consulting, but we can
Yeah.
help with a lot of advice and strategy. So one thing that's free if you become a member in the Family Office Club, which is like a Netflix model, it's $99 first month, and then it's 200 to 300 a month. And you get unlimited access to the 30 events per year.
Yeah.
One free thing is that we'll review all your marketing materials and give you a 2-page analysis of everything that we would change to make it more effective for the investor you're targeting. And probably half of our 800 members have not even ever used that benefit, but it's one of the biggest benefits because you can do that once every 3 months and we'll help you get feedback. If you need help implementing, we have that 7-person design team. But if you just want to do it on your own because you have no budget or you just have an internal resource that can do it, that can be one of the benefits. But yeah, I think familyoffices.com is the best place. There's a free book there in the industry, our event schedule, the membership options, and then our capital raising book is at capitalraising.com. So that would be the second best place.
Richard, thank you so much. Now we end, I think we already know the book, but we end all of these interviews with asking, which book do you recommend to our listeners, to our watchers out there?
Sure. I think the book called Success Principles by Jack Canfield.
Oh, really?
It's
Okay,
got
great.
like 52 different chapters on different principles to live by. And I always read that once per year and write some notes in the columns of the pages, and going back each year and looking what I was trying to do 10 years ago is really interesting to see. And each year the principles can be interpreted differently, but they're always relevant and helpful to review to kind of keep everything centered.
This is absolutely fantastic, Richard. I want to thank you so much. No one's ever recommended that book, so I love it. I'm going to read it myself. I'm a huge Jack Canfield fan, so
Cool.
yeah. So thank you so much for being here today. Check out everything that Richard has to offer. Well, not everything he has to offer, but some of what he has to offer at familyoffices.com. We'll put it also in the notes below. And everybody have a great rest of your week. I'm Jillian Sidoti, and this has been People You Should Know.